What's up, guys? Welcome to Financial Tip Tuesdays. It's such a glorious day outside. We decided to bring the show outside to talk about self-employment tax, what it is, what it does, and why it is the absolute devil for small business owners. This pertains to you if you are a member of an LLC, if you're the only member in an LLC, if you're a sole proprietor, or if you're in a partnership. This applies to you and you will be affected by self-employment tax. So listen up, this is very important. In order to understand what self-employment tax is, we need to go back to when you were an employee of an employer. And during that time, you would have received what's called a W-2 that breaks out half of the portion of the self-employment tax. So let's talk about that. So in a W-2 that you would have gotten from your employer, you would have had something that kind of looks like this with a lot of other stuff that's not on here. But we're going to talk about the federal wages, the Social Security wages, and the Medicare wages. And on the other side, we have federal withholding, which is what you set up for your withholding rate throughout the year from your W-2. You have Social Security tax and Medicare tax. The Social Security tax, the employee portion is 6.2%, and the employee portion for Medicare is 1.45%. So how this works is the employee actually pays the 6.2 and the 1.45, but what we don't see as an employee is that on the other side, the employer actually picks up the second 6.25 and the second 1.45 for a total of 15.3% in Social Security and Medicare taxes. So let's put some hard numbers to that so we can understand it a little bit better. So if you were an employee and you make about $100,000, you're going to have federal wages of $100,000 with withholding of whatever you had set it up that year to withhold for your federal tax payment. On the Social Security and Medicare sides, you're going to have wages of the same unless you're doing a certain retirement account or something like that that changes those numbers. But on the tax side, it'll be about $6,200 for the $100,000 and 1.45 or $1,450 for the Medicare taxes, for a total of, and then when you add on the employer portion of the Medicare and the Social Security taxes, you're looking at a total of $15,300 that have been paid in by both the employer and the employee for those taxes. And so on the self-employment side, what we got to make sure that what we're going to look at is how, as a business owner, you actually have to pick up both halves of those, and that is what's called self-employment tax. And so I'm going to go redo our board here so that we can show that side of it. All right, guys, we're back with our new board here, getting into the self-employment tax side of things. Other than the employee-employer relationship, we're now talking about, as a business owner, how it's going to look for you. So for example, if we have revenues in our business of about $200,000, we take out our expenses of about $100,000. To keep things simple, we're going to say we have a net income of $100,000, okay? That is our taxable income amount. So we can drop that down into our little calculation here as our taxable amount. That is what we're going to be taxed on as income to us as the business owner. And so to calculate the self-employment tax, first we get a deduction for half of the self-employment tax, or 7.65% we get a deduction for. So we get to reduce this $100,000 by just about 7.5, or by about $76.50, and which brings our total income that's subject to self-employment tax, or our adjusted gross income, to $92,350. Now this is the portion that gets hit by the full, both sides, the employee and the employer tax rate of 15.3%, which then generates our self-employment tax of $14,129. Now this might not seem like a huge punch for paying taxes, but what you got to remember is that's just the self-employment tax side. That's not even the ordinary tax rate side. So if we drop down here, we can see our ordinary tax rate, or our effective tax rate, that is also associated with that income. So because our $92,000 is our adjusted gross income for our tax return, we're looking at 18% of that for an effective tax rate. That's very rough numbers. It can be different depending on certain deductions or other adjustments that you might have to your income. For an additional tax of $16,623, for a total tax that we're going to pay of $30,000, or $30,753 in total tax that we're going to have to pay at the end of the year. And if you haven't made quarterly payments, or quarterly estimated tax payments or anything like that, then that's going to be a pretty big chunk of change to shell out on April 15th. Along with that, if you haven't made those quarterly payments, you're also going to be hit with penalties and stuff like that because of the lack of payment throughout the year. Now, like I said earlier, this applies to those who are in LLCs, partnerships, or who are sole proprietors. And there are ways that we can set you up to minimize this tax, the self-employment tax. But it does depend greatly on individual circumstances, on when we can and cannot set you up differently in order to avoid these type of things. So it is always great to reach out to your financial professional or your tax guy or your CPA to find out how your situation could play out to minimize the self-employment tax. Once again, my name is Stephen Gabrielson, and this has been Financial Tip Tuesday, talking about self-employment tax. Please feel free to reach out to me at steven@slgadvising.com or reach out on my website at slgadvising.com. If you have any other questions or concerns with this subject, please hit me up with your questions. I'd love to chat with you about it more, and maybe we'd be able to figure out a way to minimize this self-employment tax for you. Have a good day, guys.